Welcome to Media and Monuments Podcast, presented by Women in Film and Video in Washington, D.C. Media and Monuments is conversations featuring industry pros speaking on a wide range of topics of interest to media makers.
Welcome, and thank you for joining us. I'm Candice Bloch, and I'll be your host for this episode. While filmmaking is a creative process, it's also a business. And to be successful in your productions, it's important to manage those business aspects thoughtfully and properly. On this episode, we aim to provide some guidance and advice on the subject through 2 interviews. First, I talk with CPA and MBA John Aaron, where we discuss things to consider when it comes to funding and taxes. I then have a conversation with entertainment attorney Paige Gold, who gives advice about insurance and contracts. John Aaron is a CPA with an MBA in taxation who has decades of tax, finance, and strategic planning experience in the corporate world. He writes and narrates on various business and educational topics and has contributed his experience as a consultant to various organizations. He's been very active in WIFV, serving as a board member and a member of the communications committee that's bringing you this podcast. And currently, he is consolidating his business and media skills into a new business as a production accountant for independent media contractors. Today, we're going to benefit from that knowledge and experience as we talk with John about some of the money matters in media making. So hi, John, and welcome to the podcast.
Thanks, Candice. Happy to have the chance to provide this podcast to WIFV members and members of the larger media community.
As we all know, filmmaking is show business, has the art side, the show, and the business side of things. There's money, paperwork, insurance, and so forth. So today, we're going to talk about some of that business stuff because while it's not necessarily as fun to most of the creators, it is crucially important to do properly. So let's dive in. So when a new project is getting underway, one of the very first steps is securing funding. Obviously, this can be done in many different ways. So let's talk a little bit about what some of those different methods mean from a business standpoint.
Sure. The first question is, how much do you need? And you have to have a credible ask. And a credible ask is a result of pre-production and budgeting. I like to relate an anecdote the managing partner of a CPA firm I used to work for would tell. He had a client who produced arguably the world's best chocolate chip cookie. They went out of business. Why? He put too many chocolate chips in the cookies. He couldn't afford it. And similarly, if you're making a movie, you don't want to put too many chocolate chips into your budget. Chocolate chips here being cranes or effects or locations or costumes. To the extent your story would support alternatives, you need to do that. Now, we all know the steps. You get a script, you break it down, you schedule, but then you have to budget. When you're scheduling and breaking down a script, you're going to make a storyboard. Just think of budgeting as being your financial storyboard.
When people are thinking about how they're going to start getting their funding once they've got their budget and they know how much they need to get this done, what are the differences between like self-funded, pitching to investors, loans, grants, crowdfunding, donations, those kinds of things?
Where's the money going to come from? It can come out of your pocket. It can come out of grants. It can come out of deals if you can sell the script to a distributor before you start making it. Or more likely in these days, particularly for smaller projects that are independently produced, it may come out of some form of crowdfunding. So there are basically different crowdfunding sources, and they each have different tax implications. The most common crowdfunding source that we would run into in terms of funding a project like this would be something like a Kickstarter or a GoFundMe. It's technically something that's known as a reward-based crowdfunding source, in that the reward may be recognition, a mug, a T-shirt, something, as distinguished from, say, if you have an LLC that's your production company. LLCs don't sell stock. They can't raise money themselves by offering a position. So the crowdfunding, if you can raise enough from friends, family, and assorted hangers-on, is one way to do it. But there's a major tax impact that everyone has to keep in mind. That income's taxable.
Mm-hmm.
And should you be lucky enough to raise everything you need, you want to be conscious of your timing. In other words, if you raise all your funds in 2022, but you don't finish your campaign until November, December, you're going to have all that income in 22. But if production doesn't begin until 23, you won't have any offsetting expenses. It's one of those things that you have to keep in mind that kind of sneak up on you.
I'm sure a lot of people wouldn't necessarily think of that, which is why these kinds of things are great to discuss ahead of time. If you're not doing any crowdfunding thing or direct donations, and if you're maybe not able to get a grant, if you're perhaps pitching to potential investors, from a money person perspective, do you have any tips of what helps make a good pitch for that?
The critical component is knowing how much you need to ask for. Mm-hmm. And that gets back to the concept I opened up with about breaking down, scheduling, and budgeting.
So you did mention LLCs already as well. And we know productions come in all different shapes and sizes, and all the people listening they range from amateur to veteran and small to large and medium and all of that. So what are the differences between being a sole proprietor, an LLC, or a sub-C corporation, for example?
Clearly, you can choose any form of business that works for you. The difference has to do with legal liability or protection from liability that corporations offer compared to, in effect, funding the project out of your wallet as a sole proprietor. Many of us who have been self-employed from time to time, particularly before LLCs were available, actually wouldn't have to form anything. You would just do business either under your own name or an assumed name, a DBA. But essentially, you're operating your business out of your wallet. It's fine, unless something goes wrong. So to try and protect yourself against lawsuits, liabilities, even if you had, say, errors and omissions or casualty sorts of insurance, you're still personally liable if you run it as a sole proprietor, which means that any of your personal assets could be the subject of an attack. You could lose your house, you could lose investments, you could lose too much if you don't have the protection of some corporate form. Now, LLCs, limited liability corporations, and subchapter S corporations are unique in that they're hybrids. They give you the same protections to varying degrees against personal liability for acts of the corporation. It's a matter of discussion between you and your attorney to spell out exactly what the limits of those protections are and how far they extend, because it's not impossible, to use the legal phrase, to pierce the corporate veil in certain cases, and you end up with your personal assets being exposed. But it's certainly better than having no wall around your project at all.
Mm-hmm. So it sounds like you would recommend doing an LLC or something like that rather than being a sole proprietor.
I would, from both a tax, a reporting, and as a non-lawyer, from what I may say about it, having some degree of protection from liability and insulating it within the four corners of a corporate structure is, to my mind, always preferable. But you and your attorney and your tax counsel can tell you which one's better from those points of view. The nice thing about LLCs is that it very much simplifies the reporting. Now, the question has arisen in the past, what happens if I don't make money with my movie? Or it takes a number of years for my movie to get from pre-production to a screen and actually drive ticket sales or rental or downloads. One of the best defenses against the hobby loss rule, which says that if you don't have income in 3 out of 5 years, the IRS may presume that you're a hobby and not a business and therefore disallow deductions. I wrote a blog piece for WIFV some months ago explaining that there's a case out there called Story, Storey, where a judge told Miss Story that she was in fact a business and could take those deductions because she was clearly not a hobby. How did she sustain that? She did it by meticulously demonstrating a profit motive, keeping copious, detailed records, having a separate bank account, and memorializing everything she did to demonstrate that she had a profit motive, including paying for seminars on topics like this to find out, how do I do it? Going to networking meetings, learning how to distribute, paying fees for courses. Being scrupulous about appearing as a business is absolutely necessary to defend against the possibility of the rebuttable presumption that you're merely a hobby. And having a corporation, such as an LLC or an S corporation, is really going to help in that regard.
You had mentioned before about the financial storyboarding concept that you like to talk about. So let's go into that a little bit more. I mean, obviously there's the budgeting element and breaking it down, but if someone were to come to you with a new project, for example, what are the first steps that you would talk to them about for making sure that it gets done?
First, I need to understand the business structure. I need to get a sense of the scope. I need to get a sense of who will be funding it. And then, if they've already broken it down by scene, I need to sit down with whomever on the production team broke it down and then start to attach dollar signs. Now, when we talk about storyboarding, there might be 3 or 4 or 5 different camera angles during any scene. That's going to tell us how long it's going to take. Okay, a traditional storyboard just says, here's how I'd like it to look. But it's going to take so long to capture that look. That time times the rates that you will find by surveying the typical costs in your community, it's going to tell you what's going to cost to produce each scene. Add it all up. In essence, that's what it's all about.
Yeah, so that's great. It's a good thing to keep in mind. Obviously, from a creative storytelling perspective, there is that planning out the story. And it's a good tip to also have what is each scene potentially going to cost so that you know realistically what's going in.
Yeah, exactly.
It's a wonderful piece of advice.
Thing is that any accountant could multiply times dollars.
Mm-hmm.
But the perspective that I am advocating is to keep in mind what creative alternatives might exist, so that if you say, I want to shoot a scene in a health club, I've got to rent the health club. Is the scene about the health club, or is it about the conversation the 2 or 3 women who are working out together have? And could they work out, say, on yoga mats in the living room or the backyard and save all that money without trying to drive the artistic arc of the story, just having an eye on what the alternatives are that may allow you to tell the story more economically is valuable.
Yeah, so it's almost like having contingencies. This is your first choice, your second choice, and your third choice for how to get a scene done, but based on what you were able to actually gather for your budget.
Yeah, because you can shoot for the moon. You can put together the Cadillac budget and then say, based on my budget, it isn't going to cost me a Cadillac, it's going to cost me a Tesla. Maybe I ought to be looking at a Toyota.
Obviously, that's one thing, but then there's also the creative constraints that allow for creative problem solving, and that is a budget constraint as well as what other people come up against in terms of locations and who's available and things like that.
And to what extent can you barter a credit for cash?
Mm-hmm.
Yeah, we talked about a rewards-based program. You can have tiers of contribution. If you contribute up to X number of dollars, we'll send you a coffee mug. If you contribute up to Y dollars, we'll give you a copy of the script signed by the director and the stars.
Mm-hmm. Different pledge rewards. So there is imagination within money as well, is the point I'm seeing here. Needed for sure.
Yeah, exactly.
Once everything is put together and you have your budget and your pitch deck and you've gotten the money that you need for everything and you're about to start your project, what from a money sense is success?
There's 2 components to success: getting the money, having the money go far enough, but ultimately getting your work on a screen, attracting an audience, creating a body of work, and staying in the game. And not incidentally, not alienating all your friends and family who gave you the money in the first place because you couldn't get it done. That's success.
Making sure it gets done, and also not forgetting to factor in distribution and all of that stuff beyond just getting the thing in the can, so to speak.
Exactly. I mean, budgeting is a cradle-to-grave process. You will have to account for fees, for rights, for insurance, for health and safety on set, for you name it. I've put together a model chart of accounts that stretches for 2.5 pages. And you have to have a contingency fee. Something's going to go wrong. You're going to lose a day of shooting because of rain.
Nothing ever goes exactly the way you expect, which is part of the adventure of production, as we all know. If this is all sounding overwhelming to anyone listening, that is why people like John exist. Definitely consult with and talk to people who are experts in these matters and will know what questions to ask and those little things to keep in mind to get you a successful beginning through production to the end and distribution as well. As everyone is aware, tax day is right around the corner. And the filing deadline for 2021 is just upon us. It might be too late for this year, but are there any last minute tips for things filmmakers should keep in mind for next year? So as they're getting into doing their projects in 2022, when they're going to have to file?
Yes, the facts for 21 are now set in stone. It's always good to plan for the future, just as you do with a budget for a project that overlaps more than 1 year. The good news is there are still a few areas where taxpayers may have some latitude in how they treat the 2021 facts. Some topics that our members may not be aware of. I want to focus on just a couple of areas, including crowdfunding, obviously the question of timing. And if you formed a new LLC in 2021 for the purpose of this production, you've got your crowdfunding income but no expenses. Check with your advisors. Maybe you can use the accrual method of accounting and take into account on an accrual rather than a cash basis those expenses that you reasonably expect to incur next year. The other thing is, for an ongoing LLC, perhaps you made money and you can make a pension plan contribution. There are certain elections, if you've acquired equipment, to expense them in the first year rather than depreciate them ratably over their lives. But you should also look at, during 2021, if you had COVID loans or grants, make sure you check with your tax preparer to see what you may be exposed to, whether the loans or grants may be forgivable, the extent to which, let's say you receive payroll protection plan money or other grants, the extent to which you're allowed to deduct your ordinary and necessary business expenses funded by those grants. So those are things to contemplate as you're putting your information together for your CPA. And obviously having a good set of books during the course of the year makes it less of a headache.
All very helpful and useful information. Any last bit of advice?
Earn more, spend less, save. And if you can spend less on your movie, then the potential of it being financially successful, to the extent any movie that's made on spec may expect to be financially successful, is at least enhanced. Without going through the process, you're making that goal less attainable.
You want to be focused on the art of it, not so stressed all the time. So all that pre-planning is really important. Thank you so much for chatting today about some of the fundamentals of what to keep in mind when it comes to dealing with the money side of things for production. I'm sure filmmakers have learned a lot more about creating successful works and getting them all the way from concept to screen. So we really appreciate you sharing your knowledge on the podcast today. Thanks.
Thanks. It's been my pleasure to pay back and pay forward for the WIFV community in respect to all the things that I have derived from being in the community. So it's always my pleasure, and I'm always happy to talk about these related subjects.
I'm now sitting down with Paige Gold, a bicoastal entertainment and media attorney with extensive legal and business experience, gathered from years of practice involving television and film production, copyright and trademark law, contracts and negotiations, First Amendment rights, and more. Before getting her law degree, she had a background in television production, and as an attorney, she has counseled clients ranging from production companies and independent producers to TV personalities, authors, PR specialists, and communication firms. She is also a WIFV member, and brings her wealth of knowledge and experience here today to chat a little bit with us about the business of independent filmmaking. Welcome, Paige, and thank you so much for joining us today.
I'm very happy to be here.
I guess we'll just dive right in on the legal stuff. What are some of the legal matters that you found that newer filmmakers tend to just overlook, or things they don't yet know to consider, perhaps?
On a basic fundamental level, a lot of them are doing this because it's a passion, because they love the art and the craft, and they don't realize it's also a business and that they need to operate like a business, which includes having signed legal documents with the people you're working with who are helping to put together a production. A lot of times boils down to not getting releases, not getting permits, certain things that when it comes time to try and find a distributor, they're going to have to track people down and get them to sign stuff. I years ago met with a young man who he and his friends had made a horror movie, and they were friends. They'd done it, edited. Nobody had signed anything. And some people, like including the director of photography, he didn't even know what it was. And I said, this is probably unreleasable because it's going to be hard to get errors and omissions insurance unless you have releases from everybody. And you don't want to lie on the application by saying, this is you. So that was like the biggest mistake in terms of not having paperwork. Other times people wait till the end, and it's a lot more difficult after you've wrapped to get all the signatures you need. People go their own separate ways. So I'd say getting started, just as you set up a shot sheet or a storyboard, you also need to start by consulting with an entertainment lawyer who understands what documents you're going to.
Attorneys often suggest that producers use some form of corporation to shelter them from potential civil liabilities arising from their work. What are some examples of some potential lawsuits that filmmakers should be aware of or concerned about?
First of all, an LLC will do for a low budget film, often for a medium budget film. There's two types of insurance, kind of business insurance that any retail store would have, accidents, injuries, that's the kind of thing you want on the set. And after you've finished shooting and editing, you need to get errors and omissions insurance. And that is for the more abstract lawsuits by people who say you stole their script, by people who say that was based on my life. I can't believe you used me. You've embarrassed me in front of my family. That actually happened. I wish I could remember the name of the movie. Some very well-known movie where the screenwriter used the name of a guy I went to high school with, and I think that was all the character had in common. It was not Forrest Gump, but it was something like that. And the real living person tried to get a bunch of money, and he was unable to because it was, and the name was not that unusual. It was, say Steve Smith or something. So it was, the lawsuit didn't go anywhere. The problem is, even if you get sued by somebody who doesn't have a case, it costs money to defend yourself. That's why a lot of lawsuits, broad kinds of lawsuits, settle because it's cheaper than going to trial. Also, as a practical matter, you cannot get errors and omissions insurance unless you have a business entity. And the film, if you produced it as yourself, you need to transfer all rights to the LLC.
As you said with that example, you don't know, even if you're doing something that you don't see as a problem or an issue, that doesn't mean someone might disagree.
Whoever it was named somebody, and I don't think he even knew the person. It just seemed like a good name. And yeah, somebody came out of the woodwork. Movies that are based on real events can be tricky. And there was a lawsuit, either the book or a movie about Sylvia Plath. Somebody sued and said, I was recognizable in this and you embarrassed me. And the problem was that it was a different name. And unless somebody actually knew that woman, they wouldn't have known it was her. And by suing, the whole world knew it was her. So those things generally backfire. Anyway, those are things that you never imagine. And by the way, one thing I always say is that if your movie doesn't make money, you don't need to worry about most of this. 99% of the time, you don't need to worry. It's when your movie is successful and suddenly it gets distributed, starts making money, that's when people are able to find lawyers who are willing to file suit.
What's the difference if you're doing like a documentary versus a narrative?
A documentary, you get everybody who's on camera, you get them to sign a release saying, I can depict you, your voice, your face. In many cases, if it's somebody who's a significant personality, it's about that person, the producer will have to give them the right of consultation. And as a matter of fact, there was a documentary, a profile of Aldous Huxley, the Brave New World author, a profile of his wife, who was in her 90s and a character. She insisted on having a makeup artist there, which the producer said, never do that with documentaries, but she wanted to look good on camera. So anyway, the point was that she, I'm sure, had a right of consultation. If you're doing a profile of a living person, unless you're going to do with this kind of guerrilla shooting, guerrilla photography stuff where you're not doing with their cooperation, you're going to need them to sign a release and probably want to write a consultation. Now, if it's a news topic, that's akin to journalism. It's very much like journalism, and that anybody who's on screen who you're interviewing needs to sign. Generally, when you are in a public place photographing, people who are passing by, in general, don't need to get releases if they're just passing by. If they're children, that could be a problem, but most of the time, in a big crowd, it's not assumed that you need to get a release from those people because there's not much chance of them suing or having a viable lawsuit. You are, however, going to need to get a release, as I said, from the person.
Yeah, and what type of language would you say is absolutely crucial to have in those types of releases?
It's a pretty boilerplate release that just says, I give you the right to show my likeness, face, voice, and character on screen in this audiovisual medium in perpetuity. And I will not sue you for how I'm depicted. So, and that's the thing. You have this kind of thing. You need anybody who's worked on documentaries is pretty aware of this, even if you only made one. You need to be on good terms with the people you are profiling. Again, assuming it's not a Rupert Murdoch type where you're doing this profile up to show how horrible he is. If it's somebody who's collaborating with you, they need to be able to trust you. So it's a lot like journalism. You want your sources and your subjects to trust you and to know you're not going to embarrass them.
For filmmakers starting out, not everyone has an attorney of their own or someone with specific entertainment experience. What are things they should keep an eye out for when they're creating contracts? I know there's a lot of templates and things available online and examples of.
The stuff that's online is about as trustworthy as a lot of other stuff that's on the internet. You have no idea who wrote it, whether it was done by a lawyer, a paralegal, somebody who just has seen it occasionally.
Would you recommend that in almost all instances you consult with a specific entertainment attorney?
In Washington, D.C., there's Washington Area Lawyers for the Arts, where they offer seminars, classes, and they can set you up at nominal price, a consultation with a lawyer. I always say, unless this movie is only going to be seen by your friends and family, you're going to need to find a distributor. Now, a distributor is a broad term these days. Netflix is a distributor, but there are many smaller distributors that in different territories. All of them are going to require that you have an errors and omissions returns so that there's a lawsuit. Again, the hypothetical guy who says this embarrassed me, they want to know that you've got insurance just like they do. That in other words, there'll be two sources of litigation defense, because presumably you do want other people to see your movie besides your friends and family.
You should assume that it's going to be successful.
By the way, and one thing, and this is, again, occasionally, people are so cocky that they spend a lot of time negotiating back-end payments. In other words, I'm only paying you this nominal amount, but if it's successful, you'll make this. And I'm always happy to help them with it, but it's not something to focus too much on. Having said that, movies do make profits. I'm not saying they don't, but the point is to focus too much on the back end. To spend hours and hours negotiating something when ultimately the back end would be $250 for each person. It's not a practical use of anybody's time.
Are there any common mistakes or oversight, or what type of advice would you have for someone that's about to take on a project and they want to make sure they're doing it well?
It takes a certain boldness to make a move. It takes a certain kind of personality. People who are always very careful about what they're doing don't have the self-confidence and the willingness to throw themselves into a project. Along with that often goes a certain recklessness. It's the same as being the head of a family when you're shooting a film. And you need to make sure everybody is going to be physically protected, because liability for physical injury could destroy you economically. There was a project, a friend told me, there's another lawyer, talked about this. She was representing a music video, and there was a bunch of young people in the back of a wagon with a bale of hay. And something happened. Either it slammed to a stop or got an accident, and a bunch of them fell off, and a bunch of them were injured. hospital bills start coming in and they're suing whoever made it, and there was no entity. I suppose the person making it planned to form it later. It was a mess. It dragged out forever because it was one of those things of the plaintiffs looking to see who they could sue. Since there was no entity for them to sue, they were going after everybody from the producer, the writer, the director.
You don't want to end up in a mess. So it sounds like if this is not your strength, make sure you have an attorney that you could talk to.
My main caution is you don't need to hire a lawyer straight off, but you need to work with, say, a production manager, somebody who knows what sort of legal documentation is needed, who can remind you when you come to a certain point. And one of the things that puzzles me, and it's not just women in film and video, screenwriters everywhere think that their screenplay will be protected if they register it with the Writers Guild. That ain't so. The only way to be protected is with the Copyright Office. The Writers Guild, it has this cash cow in people sending in their screenplays and registering them. And the whole point of registering it is so that if somebody were to steal it or copy it, you could have a basis and say, look, I own this. You had access to it, and your project was too much like it. If there were a trial over this, and you were only registered with the WGA, a representative of the WGA would get on the stand and say, yeah, we received this on March 4th, 2022. And the lawyer would say, do you know if it's authentically that person's? Nope. All we know is that we received it. I see so much in social media about just finished my script. I'm sending it off to WGA. So, yeah, I mean, you can do that if you want. It's not going to do anything but maybe get you a little certificate from the WGA. Absolutely need to register it with a copy.
Yeah, if anyone wants to get in touch with you or learn more about you and your practice, where can they go?
My website is paigegold.com, PAIGEGOLD.com. And my phone number is 213-507-6456.
Well, thank you so much. I mean, this has been invaluable, and I know that's certainly giving some people listening some more food for thought to make sure they do everything as properly as possible from the onset so it doesn't become a problem later. Thank you so much for taking the time to talk with us about this.
Sure, great talking to you.
Before we wrap up this episode, for even more information, what follows are some highlights from past WIFV seminars that center on business matters.
A great night talking about tax issues for media professionals. And I'm delighted to introduce our speakers this evening. We have with us Ben Gross, who these are all attorneys at Ivins, Phillips and Barker, one of the leading tax law firms here in DC. So we have partner Benjamin Gross, partner Helena Klump, and associate John Holbrook. And with that, I'm going to turn it over to our distinguished guest speakers. Thank you all.
Thank you, Kathy.
Thank you, Kathy. So the first one we're going to cover is the distinction between a business and a hobby. So I want to put this in context before I leap into the slide describing a hobby, just trying to think through why do we care about the distinction between a business and a hobby. Let's say that someone goes out and they start a grocery store. And they pour all of their funds into this grocery store, and the store fails. Their produce all goes bad. Everything that they've paid for, it goes up in flames, and it's a total waste. We would expect that person to get a deduction, to be able to deduct all of the money they lost trying to start up this grocery store, trying to sell the products. If someone, on the other hand, likes riding horses, and they buy a lot of horses, and they have horse breeders on staff, and they train the horses, and they practice riding the horses, and they enter in competitions, and it's just for the fun of having horses, and something goes wrong, or just over time, very expensive hobby, they spend all of their money on this hobby just for enjoyment. It's a lot closer call whether the government, society, wants those people to be able to deduct their horse expenses. There's a long line of cases, court cases, believe it or not, distinguishing between whether a horse hobby was a hobby or it was actually horse breeding with the expectation of profit. And so you can do something that's enjoyable as a business, but you have to run it in a business-like manner, and you have to have the expectation of profit. And so to avoid the problem of people just getting deductions out of their fun hobbies, playing video games, riding horses, if they aren't engaging in it as a business, you can't deduct your expenses for a hobby, but you can for a business. So with that, let's talk about what is a hobby. What is the distinction between a hobby and a business for tax purposes? A hobby is an activity carried on without the expectation of making a profit. It's pretty hard for the IRS to get inside your mind and to know what you expected. So they look at the circumstances. They look at how you engaged in the activity. Did you keep records? Did you have a business plan? They look at the time and effort you put into it. Is this just something that you spent one weekend on and then you sort of forgot about and you never took it that seriously? Or is it something where you've shown persistence and you've worked on it consistently over a long period of time? That's not to say that you could never have a business that lasts a short span of time, but these are just factors that are taken into account in generally getting a sense of whether you're trying to make a profit. And then the last factor mentioned here, but there are many others, whether you depend on the income for your livelihood.
The other thing I just note on this topic is think about where the IRS is coming from and really where Congress as well is coming from this. The concern is going to be they're afraid of abuse by rich people. So the hobbies of the really rich, oh, I want to have a winery. Oh, I want to own racehorses and, compete in the Kentucky Derby, or, those sorts of things. Or travel and take nice vacations or dabble in the arts. So those are the sorts of things that they may be, most concerned with, or where they're coming from. And I think, for most people, you should know pretty clearly, like in your mind, is this something you're doing for fun and thinking like, oh, can I get a tax deduction here? Or is this really something you're doing, for profit-making enterprise? Is that what it's about? I did have a cousin who worked for a year writing a travel guide, and, there are some jobs where you can have some really interesting and entertaining legitimate business expenses. But for most people who travel, that wouldn't be.
Thank you. And there's also a taxpayer helpful presumption that if you actually made a profit in the last 3 out of 5 years, then the IRS will assume that this is a real business and treat it as a business. It's not ironclad. The presumption can be overcome if it turns out it really clearly was not a business, but that's a general rule. So for tax purposes, what's the distinction? Why do we care? What's the consequence of having a hobby or having a business? Well, for a business, you get to deduct your expenses. That's pretty good if you have income and you're actually putting out money, making outlays to generate that income. The downside of having a business is you're subject to self-employment tax on that income. So if you're in a situation where you have a fair stream of income, but you have very low expenses, then a hobby, if it actually is a hobby treatment would be better for you, because that income would not be subject to self-employment tax, and you're not really missing out by not getting the deductions because you don't have expenses anyway. The distinction between a business and a hobby, it's based in reality. It depends what it actually is. But often in tax, there's substantial overlap, there's gray area, and there's room to argue one way or another if the situation's not clear, or maybe you haven't even decided for yourself which you want it to be. So there may be circumstances in which you expect maybe something will come of this. I'm just doing it for fun, but I'm not going to treat it as a business because who knows? I'm not spending much on it. I'm not taking it that seriously. And then down the road, if you're able to treat it as a hobby, you get the income not subject to self-employment tax. There's a narrow exception here. I generally say you can't deduct expenses for a hobby. Narrow exception for technical tax reasons. Cost of goods sold. If you're selling a tangible thing in your hobby, then the expenses that go into producing that tangible thing are taken out of the income that you receive. And so you don't pay tax on the income from that hobby to the extent of the expenses for the tangible physical thing that you sold. So in this example here, I have film. If you are selling actual film to somebody, then the cost of that film can come out of your income for a hobby. But if it's a video recording and it's just a computer file, not a physical thing, can't get that benefit. So next, the topic of choosing a business entity. And this is really a thorny set of issues, and I'll try to just lay out the framework and avoid getting tripped up with too many of the details, because really the framework should be all you need at this point, but we'll see if there are any questions.
It's rich with both tax and non-tax issues as well, which is part of the reason this is a little complicated.
So there are almost totally independent systems of business entities under state law purposes and how those entities are treated for tax purposes. And there are some connections, but they're really distinct concepts. And so if somebody tells you, I have an LLC, it's taxed as an LLC, generally you can guess what that means for tax purposes, but it really could mean 3, 4 different things for tax purposes. You don't know for sure. There's totally separate tax classification scheme that runs alongside the state law classification scheme. So for state law purposes, basic distinction is, have you registered or incorporated the entity? Have you signed it up somewhere? Have you filed papers? Or is this just something that you have informally going either by yourself or with colleagues? The unincorporated entities, for state law purposes, sole proprietorship, partnership. The registered or incorporated entities, you've got corporations, limited liability companies, S corporations, the list goes on. There are new ones coming out every few years. Who knows what state legislatures are going to come up with next.
There aren't that many things where we can give a global answer of this is good or this is bad for everybody. But as one of my undergraduate professors, made sure to impress on all of us, it is always a wrong answer to have an unincorporated partnership. And that's not for tax reasons, but you will be liable for whatever else that other person does. And even if they're a good person, they might make a mistake. They might get in a car accident, going, while doing something for the job. And all of a sudden, your house is on the line. So that is the one thing, one of the rare times I feel like I can say that is definitely a wrong answer.
Thank you. So a sole proprietorship, this is the most basic business entity. This is just you're engaging in business as a human being directly without an entity. And the tax consequences are actually pretty good. It's just pass-through taxation. You can take deductions. There's nothing really that you're missing out on. There are some tricks that you might be able to pull off with a different entity type, but by and large, sole proprietorship can be good. Downside is you're operating without the legal protection of an LLC or a corporation for state law purposes, but for tax purposes, if you're in an industry or you're engaged in an activity where liability risk is very, very low and you aren't concerned about that, it can be a fine choice to proceed with a sole proprietorship. The next type of entity is a partnership. As Ben mentioned, an unincorporated partnership can be very dangerous. You might have seen the term limited partnership. That's a form of registered or registered partnership that does give you some protection. For tax purposes, a partnership by default is also going to be passed through taxation. By definition, you need at least 2 people to have a partnership. You need a partner. And the tax reporting on a partnership can be complicated, but the tax results, not bad. And maybe this slide is one that I'd like to linger on just a bit. LLCs, very flexible entity type, because I've mentioned how there's a distinction between the state law entity and the tax entity type, or how it's treated for tax purposes. And an LLC, if one person owns an LLC and they don't make any election, they just take it as it comes, it'll be treated as a pass-through, just like a sole proprietorship, just as if there were no entity there at all for income tax purposes. But they could make an election and treat it as a C corporation, as Ben was just covering, or an S corporation, as we'll cover on the next slide. So there's choices in how you treat it. If they had a partner and there's two people who own this LLC, the default would be it's treated as a partnership for tax purposes, pass-through taxation. But again, they could make the election for it to be treated as a C corporation or an S corporation. So LLC is very flexible. There are some other entity types that can only be treated as a corporation of some sort.
I think there can be a lot of advantages in having an accountant who's very familiar with and works with a lot of clients in the field. My sister is a professional costume designer. She works for, or has worked for, like Barnum and Bailey's and Saturday Night Live, much more interesting stuff. But that is such a unique field and raises some unique, business deduction, self-employment tax expense issues. When she, after a few years in New York, a friend in the industry connected her with a accountant who was a bit of a patron of the arts and was both experienced, but also would do it pretty affordably for those who were not doing as well. And the number of deductions that just opened up in a big way, because a regular accountant who's sort of used to dealing with more traditional businesses or mostly people who work for companies or governments or traditional employment situations will just be less either able or familiar or comfortable with what is ordinary or necessary in your specialized field. So I would think an organization like WIFV, there's probably, hopefully a few of you have found some good accountants who may have a lot of experience in your field, and that can play to their and your advantage.
Yeah, and I'll add that they just really know how to ask the right questions. Things that wouldn't occur to somebody who's never seen a filmmaker's fax before. If they have some industry experience, they will know the right questions to prompt you to say, oh yeah, we did spend this much on that kind of thing, and here's my receipt for it.
Thank you for listening to Media and Monuments, a service of Women in Film and Video in Washington, D.C. Please remember to review, rate, and subscribe wherever you listen to this podcast. For more information about WIFV, please visit our website at WIF as in Frank, V as in Victor.org.